What is going on, investors? Hopefully you guys are doing well out there. That is right. It is the weekend. It's time to celebrate because it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week we have gigantic news out of Amazon, as that company looks like it's trying to buy multiple multi-billion-dollar companies. We cover that news, and I also purchased one of these stocks this week, which quite frankly doesn't happen very often, which means I'm very, very confident in the valuation that we are getting today. We'll talk about which stock I bought on today's show, but we start things off like we always do with Meta Platforms, which started the week at $163, end of the week right about $163 per share. This is after Meta set an October release date for its newest VR Oculus headset. This is coming directly from Mark Zuckerberg, who said this on the Joe Rogan program, which was quite an interesting interview, if I say so myself. Now, we're expecting a price bump on this one up to about $399. This is where these devices start. I've been questioning if raising the price is necessarily a good strategy, since these don't appear to be flying off the shelves. But again, the strategy that Meta is playing here, probably a little bit more of a long game in terms of AR, VR, and we'll see how that materializes. Now, this was an interesting one. Meta learned about that FTC lawsuit that we're talking about over the last couple of weeks that involves Within, which is an app maker, kind of a fitness app maker on those Oculus headsets. They found out about this on Twitter. Yeah, normally the FTC actually has the decency to contact these companies. In this case, Meta actually learned on a competitor's site that this lawsuit was coming down the pike. Obviously, I believe off the top of my head, I think we have a December date for that trial. We'll be closely watching that, to say the least. Moving on to Apple, start of the week higher at $169, end of the week down 3.2%, down to about $163 per share. It wasn't Apple that I bought, but boy, if that one continues to trend down, as you'll see as we go through these news events, Apple's probably a stock that you want to buy. Apple sent out an invitation for a September 7th product event. We talked about that on last week's show, how it was rumored that it was coming, and then we talked about how, well, the invitation is going to get sent out next week. We are just, I guess that's about 2 weeks away from a September 7th product event, very highly anticipated. It's called a quote. Apple always gives their events kind of like a tagline or a name, and it's far out. And the idea, I believe, or at least what I saw in the rumors, was that is going to be tied to the fact that Apple iPhone will have satellite connectivity to kind of support the already network device that your cell phone already runs on, whether it's a T-Mobile or a Verizon or something like that. Well, now you're going to get a little bit extra connectivity. At least that is the rumor. We're expecting a new iPhone 14. We're expecting potentially new watch. We're expecting maybe new AirPods. We're expecting maybe iPads and Macs. It will be an event that we'll closely watch and we'll cover here on the channel. Now, some really good news about Apple's demand. They saw 147% growth in the premium Chinese smartphone market. This is according to research. Okay, this is for $1,000 plus phones. And obviously with that phone price, that's Apple's bread and butter. They're accounting for over 46% of the total market. Now, other handset makers are doing quite well. Samsung seeing growth of about 133%. I think what this is actually showing is the Chinese market, in terms of its smartphone demand, is maturing to the fact that they're demanding these higher dollar phones. That certainly plays well for Apple. Now, also with Apple and the iPhone 14, again, this is for the device that we're expected to be released on September 7th, probably shortly available thereafter. We're expecting build plans to increase as the market shares just continuing to gain over at Apple. As yes, you can get a Google phone. Yes, you can get a Samsung phone, but the vast majority of people, especially in that higher end type phone, are choosing those Apple devices. Now, Apple plans to narrow its iPhone 14 production lag between China and now India. This should get investors very excited. The initial run of these iPhone 14s, probably all the ones that you're going to be able to buy over the holiday season, those are going to come directly from China. But what Apple is planning to do is close the gap when they start producing that next generation. So they're going to come out with the iPhone 14, and then they'll come out, maybe they call it the iPhone 15, but they'll probably probably maybe it's like the iPhone 14s or some kind of acronym after that. Well, they're going to reduce the time they start producing that in India. So that'll be exciting, I think, for investors. It'll give us another area and maybe another slight layer of protection just in case things go haywire in China for any number of different reasons. Now, Apple's new iPad Pro and MacBook Pros are set for mass production later this year. This is despite TSM, which is their main chip provider. They have a 3-nanometer chip size that is expected to start mass production sometime in September, and then they're maybe expecting maybe a January ship time. So it's unclear if these new MacBooks will, incorporate this or not. This new 3-nanometer technology from TSM, we'll see, but certainly highly anticipated by Mac fans as well. Now, Apple's employees are starting to push back, heading to this beautiful campus out in Palo Alto. They don't want to go there as they are against a return to office mandate with a petition. I think Apple's looking for employees to go back like 3 to 4 days a week in the office, and employees are starting to push back. What will solve this is the unemployment rate starting to tick up, which if you listen to Jerome Powell is probably happening sooner rather than later. So we'll see how those kind of unionization and these kind of employee benefits and kind of work from home, we'll see how this evolves if the job market starts to get a lot tighter. Now, in terms of Amazon, this stock started the week at $134 per share. This one ended down to about $130 per share. This is not a stock I bought yet. We'll look at all of these from a technical perspective. I will remind you of the technical levels that we're looking for a pullback. This one did not reach it, but I would actually anticipate this one reaching that very soon. Now, some major news, although this comes from kind of unconfirmed sources and unnamed sources, this is what we found out, but Electronic Arts, which is a video game maker of popular Madden games and other games out there, look, they're basically on the block for sale, and the rumor is Apple, potentially Disney, and even Amazon might be making a bid. Folks, this is a market cap of over $35 billion. So out of Amazon and Disney, neither of these companies have that kind of cash just sitting around. Apple, we know for a fact does. Whether or not regulators would allow that to happen would be interesting. It also would be interesting the premium these companies have to bid, because obviously we know Microsoft has taken Activision under its wing. It's trying to consummate that deal for $95 per share, or at about $69 billion. But this one kind of came out of nowhere. Amazon potentially, maybe trying to get Electronic Arts, at least that is the rumor. Now, Plug Power, which we've criticized long here on the show, that surged on green hydrogen supply deal with Amazon. This is an interesting deal, actually probably for both companies, but particularly for Amazon. So they're going to get this supply of liquid green hydrogen. This is going to allow Amazon to help like decarbonize and kind of go to a net zero, kind of a way for this company, maybe kind of from a marketing perspective, but kind of a save the earth perspective, where they can kind of reduce their impact on the world, where they're going to switch to this green hydrogen for all of their forklifts inside their warehouses. The way they're going to do that is they're actually going to agree to these warrants for over 16 million shares at $22.98. Before you get excited at Plug Power, the stock currently is trading for $28.94. So they actually sold these warrants at a discount. They vest over a period of time if Amazon buys a certain amount of this from Plug Power. Look, I think this is mutually beneficial to both companies. Now, Amazon is getting rid of its telehealth service called Amazon Care, according to WAPO. Now, what's interesting is the fact that they had 6 corporate customers, and they're closing this because they weren't seeing any value in the product. This is what I like about Amazon. They try things, they don't always work out, but the best thing about Amazon is they cut the cord very quickly on things that don't work out. The internal motto, at least this was a couple of years ago, if you got hired on at Amazon, especially at the executive level, they wanted you to fail very quickly. So they wanted you to try things and then fail at it quickly. And then once you realized you fail, cut the losses and move on. That's what I like about Amazon. Now, Twitch, which is, I believe, wholly owned by Amazon, they're allowing partners to finally stream onto YouTube, Facebook, and other platforms. Now, it's interesting. They're asking that their partners not stream on other platforms for extended periods of time. These are gamers. These are other people that are streaming themselves and then playing games, particularly on Twitch. Well, some streamers want to simulcast, like onto a YouTube, onto an Instagram. And in the past, Twitch has not allowed that. Now they are starting to allow that. I actually think that is a good move that will probably keep Twitch's competitive advantage over some of those other platforms and probably keep people on the site. Now, Peloton Interactive popped after they struck a deal to sell their products on Amazon. Here's what I thought broadly about this. Look, it's probably good for Peloton. Maybe in the shorter term, they'll have to pay a higher commission and higher fees on the goods that are sold through Amazon. My guess is Amazon probably negotiated maybe a smaller commission that they take off these items. What I think this is going to do, this actually gives Amazon first-party data onto Peloton sales. So now Amazon, yes, Amazon could open up Peloton's financials and look at their sales and their expenses and their net income. They certainly could do that. My guess is they probably have, but this is going to give them kind of a direct look at this. Also, what it gives for Amazon is maybe Peloton starts advertising on Amazon, and that could definitely feed to the bottom line of Amazon. But what I think this probably is Amazon is interested in buying Peloton, and so they're allowing them to sell the bikes and the materials on the site, and then Amazon gets like basically all the data, all the search engine data, all the stuff that drives traffic to Peloton, and then they can decide if that company is worth buying. Now, Amazon, it continues to grab e-commerce market share. This is good, right? Okay, and this is according to Bank of America data. They're taking market share from Walmart and Target. And this is exactly what you want your companies to do in a recessionary environment when companies are having to pull back, when they're having to cut staff, when they're having to tighten their belt. You want the companies that you invest in to get aggressive and get out there and start grabbing market share. And this is why I love Amazon. It doesn't come without its risk. It doesn't come without its volatility in the stock, and certainly a premium valuation with Amazon. As you look at a forward price to earnings on this one, over 1,000. We obviously know from the financials, they're doing a lot of investment. We know that they're being aggressive in the acquisition mark, and we'll see more of that here in a moment. But Amazon reached a DirecTV deal to bring Thursday night NFL game to bars and restaurants. I thought this was really interesting. So as you know, Amazon got exclusive rights to show NFL games on Thursday nights. That means you must have an Amazon Prime access on either a smart TV or an Apple TV or a Fire Stick or a Google Stick or whatever, a Roku or something like that. Well, obviously in a bar, they might not have that type of setup or be able to have that capability. Well, it's interesting. Amazon was able to strike a deal with DirecTV. So if you go to a bar, you go to a restaurant, and you see the Thursday night deal, Amazon is actually kind of behind the scenes on that. That's the interesting part of these sports rights, is you acquire the rights to them, and oftentimes you can kind of work out little side deals, obviously with the NFL very closely probably negotiating those deals as well, but very, very interesting. Now, also on the acquisition front, this one also came across this week. I mean, we're talking about even before a lot of big premiums in these stocks, we're talking about an excess of $50 billion worth of rumored acquisitions this week for Amazon. Again, from a balance sheet perspective, this company does not have this type of cash, but from an investor perspective, I love this aggressiveness as Signify Health gained 30% this week, as Amazon and United Health are supposedly starting a bidding war for this stock. This is an over $6.7 billion stock. It's expected to reach at least an $8 billion valuation in terms of a buyout. We'll see if Amazon is able to secure, but I tell you what, Amazon, I don't need to probably even tell you this, but over the last couple of weeks, we've seen them acquire multiple companies. We also saw them cut off Amazon Care. This company is moving extremely, extremely fast into healthcare, and I'm very excited about what Amazon has down the pipe, because I don't even think we've began to see what Amazon has in store for their healthcare offerings. They're obviously kind of building the troops. They're building the army. They're getting it built up, and they're going to send it out into war. And that's what I'm very, very excited about when it comes to Amazon and healthcare. Moving on to Netflix, start of the week higher at $228. Not surprised. This one headed down this week by over 2%. End of the week closer to $223 per share. Not a lot of news out of Netflix this week. Moving on to NVIDIA, start of the week at $172. End of the week down about $10, which is close to 6%, close to $162. This is after we got the full earnings view from NVIDIA. We also got Q3 outlook as well. I won't go into really big detail about this because we did post post a video about this a day ago, but revenue expected for Q3 at just $5.9 billion. Consensus was $1 billion higher at $6.9 billion. On my NVIDIA video, I said, look, you could trade this stock, you could make some short-term profits on it. I do not recommend stocks like NVIDIA and Meta that have negative earnings growth projected out more than 3 or 4 quarters. It's just a rule I have as an investor. You can do whatever you want as an investor, but I tell you what, from my over 20 years experience in investing in stocks, buying stocks immediately when the news turns negative is a very, very bad decision. And we saw today NVIDIA down over 9% on this news. Now, analysts also agree that there will likely not be a V-shaped recovery. This is also why I would not pile into NVIDIA, at least at this price. We'll certainly talk about this from a technical perspective. A shorter term perspective, I think you're going to have a lot of volatility, a lot of beta in this stock, and I think you're going to be able to make some money from a shorter term perspective. It doesn't mean we don't pay attention to it, but from a longer term buy and hold perspective, I think it's going to be well telegraphed, their demand falling off, and I think their demand coming back will be well telegraphed. When that demand starts to come back, that's when we recommend NVIDIA from a long-term perspective. Moving on to Google, I told you there was a FAANG stock I bought this week, and I bought Google. It started the week at 115 and slipped down over 4% to 110. I'll show you the significance of this. Now, this does not mean I think this is the bottom for Google, but what it does mean, I think we're within about 10% of what I would believe is very close to a bottom on this one. So I started a position today. I would actually probably anticipate the momentum heading this one down a little bit more, and I will continue to buy shares of Google. Now, Google's Fitbit unveiled a new tracker device, smartwatches, including a Versa 4. Now, I don't know if a lot of you remember this, but Google actually bought Fitbit several years ago. It took a while for that transaction to close. My guess, this is kind of pretty much a rounding error from a revenue perspective, from certainly an earnings perspective over at Google. Probably gives them access to first-party data, also manufacturing capabilities. Also could turn back into maybe a larger product and a more interesting product suite for Google, but in the meantime, still pretty much a niche device over at Fitbit. Moving on to Microsoft, I posted that I bought a FAANG stock. A lot of people thought it was Microsoft. This one's closed. It's not quite there technically. I'll show you that towards the end of the show, but Microsoft started the week at about 280. This one slipped down big time, over nearly 4.5%, close to $268 per share. This is after Microsoft's gaming chief felt good about the progress of that Activision deal. Obviously, this one's been in turmoil for many, many months. They've agreed to buy this company for $95 per share in cash. This was back in January. That's a $69 billion deal. Right now, Activision Blizzard is trading about $80 per share. So there's quite a bit of delta on this one. A lot of people, a little bit of doubt, and some of that doubt was increased this week as Activision ticked lower on the report that Microsoft deal may get an extended and expanded review in the UK. Obviously, when you look at Meta and what the FTC is doing to them, to a $400 million deal, you'd expect a big, big look into a deal that is this size. I can't handicap this type of thing. The longer it goes on, I think probably the better odds of it happening. But obviously, we saw the ARM and NVIDIA deal fall apart, so that's certainly something that could happen here. It would be a pretty major breakup fee. I think it's about a $3 billion breakup fee from Microsoft to Activision Blizzard. I think in the shorter term, Microsoft stock might react negatively, but in the longer term, then I think investors would realize, oh, they're not going to have to pull out of their pocket $69 billion, and they might be able to spend that money in some other way. Moving on to Tesla's. This stock split this week. Started the week at $289, ended the week basically flat, right about $288 per share. This is after the California, out here in California, they are doing crazy stuff out here as they set a new ban on gas car sales by 2035. I would be shocked if this actually goes into effect by 2035. But quite frankly, the politicians out here in California are absolutely bonkers. They are a special breed out here in California. So look, from an EV perspective, I already own 2 EVs. This is not going to necessarily impact me, not going to impact like really affluent people. What I worry about, number one, is how does like the non-affluent person, how are they going to survive? Like they're not going to be able to buy a new car. They're going to be able to buy a used gas car or maybe a used EV, but they're not going to be able to afford that gas car anymore. But probably bigger than that is our power grid out here in California. No way. absolutely 100%, 110% cannot support this. And people wonder why I threw solar on my roof. It's because of stupid politicians like this. They are going to blow up the power grid over here, and my power is going to be on because I put solar on my roof. Now, Elon Musk says Tesla is hiking the price of its full self-driving system to $15,000. I am so impressed by Tesla's confidence in the full self-driving software stack to sell it for $15,000. Again, I bought 2 Teslas and I didn't even think about paying $15,000 for it. It could have been $5,000 and I wouldn't have paid for it. So I'm certainly not the customer for this. I think it's incredibly expensive. I think something like this is incredibly overpriced, but I'll have confidence in Tesla because look, the stock performance and Elon Musk, certainly, who am I to really criticize and question what they are doing? I'm impressed with this. If they can continue to drive the price of this up, this is great for shareholders, even though I believe a product like that is wildly, I'm talking wildly overpriced. Now, moving on to the technical segment of the show, I want to remind you, this is the technical segment of the show. So I might not recommend Meta from a long-term perspective. Long-term buy and hold, forget it portfolio. Same thing with NVIDIA. Probably the same thing for Netflix as well. But doesn't mean we can't make money in the shorter term. That's what this technical segment is for, but it also helps the longer term investor kind of time their buys and make sure they're getting in at a good price. Now, in terms of the S&P 500, we've been waiting for this for several weeks for finally this rally to start giving it back. It started to. The momentum is clearly down. I would wait for this one to continue to melt down. I don't necessarily think we'll retest these lows. Obviously, the closer we start getting there, the higher probability that happens. We'll wait to see what happens, but the markets have turned negative. The momentum is now negative. For the most part, you're waiting for these stocks to pull back. And again, I'm going to run through all of these names and I'm going to show you the areas where I am actually getting excited about these areas pulling back. Now, in terms of Meta, it came very close this week. I actually came very close to making a shorter term kind of trade buy. It showed up 2 or 3 days ago when this stock was at 160. You could have played the smaller bounce. I'm waiting for this one probably to get under 160. That, again, if this shorter term trend of higher lows holds, you should have some support there. If you put this trade on in Meta, make sure you put a stop loss on this one. I would put a stop loss. This would be a very, very tight trade. I would buy this one at 157. I would put a stop at 154. So I'm risking $3 with the upside that this area holds. And then we retest kind of the highs we made back up here. We get some kind of maybe mid bear market kind of rally and we go from 150 up to 160, 170. You're risking $3 or $4 for upsides of 10, 15, 20. That's the type of risk reward I really like. And I think Meta is getting very close to that, probably as early as next week. Apple put up a gigantic, we're talking about a gigantic red candle, and that's what we've been expecting with all of these stocks. I talked about how on last week's show, a lot of you guys read the thumbnail and the title. Those are meant to be clickbait. I am guilty of it here on YouTube, like pretty much everybody is. If you listen to my video closely, I said the first area that I would be even thinking about buying Apple is down here at 157. So we're still a ways from that, okay? From 163 down to 157. That would be the first area, not where I would buy. There's a further area down here at 150. That would maybe be where I nibble. Let's say I wanted 10 shares of Apple, maybe a share or two. Further down, okay, if you break through 157 and you get to 150, the momentum is clearly out of this name. I think you come further down below that. Anything south of 150 and all the way down here, which I would consider rock bottom, down at 137, that's where I'd be really interested, okay? What I tend to do is I buy stocks when they're about 10% what I think is rock bottom, okay? And I may not be right about the rock bottom, but my feeling with Apple, based on everything that we know with the buybacks, the dividends, the revenue, the upcoming products, the products that we don't even know about that might provide a lot of upside, I think rock bottom for Apple is somewhere in this 130, 140s, okay? Basically the lows that we made back in July, okay? 10% higher than that is right here in this 140, 150 range. That's where I'd be kind of excited about Apple. Not quite there yet, but could be there as soon as next week. Same thing with Amazon. When this stock went on its monster rally after earnings. I told you we would meet resistance up here. Again, this is according to technicals. They don't always play out perfectly. I'm not trying to act like I know everything. I'm just talking to you from a probability perspective. This is where this stock would likely fall, and that's exactly what happened. The first area where I'd be excited about Amazon would be another $10 lower at 120. More specifically, I think rock bottom on this one is around that $100 range. So I'd be excited right in that 110, 115 range. You'd have to pull back a little bit more for me to get excited. Amazon complicates the situation with, if they want to make a $40 billion acquisition when it comes to EA Sports, they're rolling up all types of healthcare companies as well. It looks like they're trying to do $30 or $40 billion worth of acquisitions there. That complicates the situation a little bit with Amazon. They're probably going to have to issue shares, maybe take on some debt, maybe issue some bonds. I don't know how they're going to finance these deals. I just know if they bought an EA Sports, they don't have the cash, at least from an operating perspective, to cover that. We'll see how Amazon finances that. That could create more negative pressure on this stock. I would be a buyer when we get south of about 115 on that one. Now, Netflix pulled back to an area that we thought would absolutely happen. We put a red candle here to this top of there's a very loose kind of upper trend that we're making, but it's also acting, it was basically resistance back here. Now it's acting as support right here about this 223. Again, I told you on last week's show, not really excited from a shorter term perspective for Netflix there. I would get more excited when we get down here to about 199. That is because if this upper channel holds, and right now from a probability perspective and a technical perspective, you actually would expect it to. Your downside is down here at about 180, 185, about 10% higher is in this 199, 200 range. That's where I would first step in on Netflix. Now, moving on to NVIDIA, big, gigantic red candle, exactly what we thought. We're sitting right on top of our green box. We've had this marked out for months. I mean, for months on this stock. We've been looking between about 115 and 160. More specifically, I think more recently, we've started to go sideways. I have these two red kind of channel lines in here. The top of the range is at 195. The bottom of the range here is at 144. From a shorter term perspective, if you see NVIDIA's momentum continue next week, and we get close to this we'll just call it 145, just make round numbers. If we get a pullback to 145 in NVIDIA, from a short-term trade perspective, again, I have a long-term portfolio and I have a tactical trade portfolio. And I actually posted the performance of that portfolio on my Instagram account. I'll try to throw it up here on YouTube at some point. But over the last 3 years, that portfolio is up over 150, 160%. And it's by making high probability trades like this. We pull back into an area of support right here at 145. I would put just a tiny stop on this one. I would probably put it right here at 140. So I'd buy it 145. If it kept going down, I was wrong. That's okay. I'd get stopped out here at 140 and I'd lose $5 per share. I have the upside though of bouncing from 140 probably to the middle of the range to 175. Folks, that is $35 upside. I would have a trailing stop on this one and completely get out of it closer to 195. That is $40 upside with a $4 risk to the downside. Those are the type of risk reward trades you want. And that's the setup we're getting with NVIDIA. I would not buy this one from the long-term perspective. That will come in time. Now, the one stock you buy and hold investors out there that I bought this week that set up perfectly exactly how we thought was Google. Now, it didn't come all the way to the bottom of, again, we're making a series of, it's not perfect. We're making a series of higher lows over at Google. We're also making a series of higher highs. Yes, we've seen cryptocurrencies. We've seen a lot of stocks actually form this formation and kind of dump out the bottom. That is possible with Google. But my point is, I believe the downside with this one is probably back down to this sideways consolidation. Now, look, Google could start laying bricks like NVIDIA, like Netflix, like Meta, and this stock could go way down, okay? I don't necessarily anticipate that. I think the bottom on this one, at least from the information we know now from Google, is down here at $100. So when it reached 110, 111 today from a share price, I actually stepped in and buy. Now, that is a small buy. I'm actually expecting the momentum to continue to go lower on this one. I will probably have to buy this one again, maybe 109, 108. If it breaks through this technical line that I have here and gets down here about 105, probably a little bit more aggressive. We come down here to 100. That is when I get very aggressive and probably open up my entire position that I want to have in Google. And then I start to hope and pray and probably set a stop loss somewhere down here at about $95 per share, because I tell you what, that is serious momentum loss with Google. It would start compressing the multiple and the valuation on this one. That is why I think, yes, it's probable we come down to 100, but I think it's improbable that you really break through that. Again, not saying it's impossible, just think the probabilities are probably in my favor. Somewhere in this 100 to 110 area, I think holds. We continue resuming this very shallow uptrend. This one moves to the top of the range. If you want to trade Google also from the shorter term perspective, you can go ahead and do that. You can buy it at the $110, $100 range, put a stop at 105, play the upside to 122, although I think your risk reward probably with an NVIDIA and a Meta is probably a little bit higher, at least from a trade perspective. Now, a lot of people thought that I stepped in and bought Microsoft. Not quite yet. We're talking very close. And this is one I'm absolutely going to be buying in the shorter term, but I think what we're doing here with Microsoft is we're starting to make, if these are the lows back in June, even if we retest them, you'd at the very least have some kind of sideways consolidation going. I think with Microsoft, we probably come down a little bit further and maybe retest down here at about 250. This one gets south of about 260. This one's close. I mean, if you're a long-term investor, you might not want to kind of be this fine-tuned with where you're trying to buy this stock, but this one's very close. You get a pullback south of about 265, 260 on this one. Also where I would add. It's not where I would put all my money and all my margin. I don't trade on margin, but I would not do that really with any stock, but it's where I would add to a position that I already have with Microsoft. Tesla's, obviously this stock is split. Unfortunately, it erased all of our little pretty technical lines. This one looks like, to me, it is absolutely finding some support here, and it makes a lot of sense. We talked about this on the show a lot. It was before the 3-for-1 split. It was the $900 share price. Obviously, after a 3-to-1 split, the $300 per share price is acting as a pretty strong area of support. This stock is starting to flag out sideways. That can be absolutely a bullish formation on this one. You're looking for this one actually to push to all-time highs. That's really what you need with Tesla to really prove that this downward trend line and this kind of downward kind of consolidating pattern that we're starting to form with Tesla, that is over with. I think in the shorter term, Tesla just kind of coils out at this place. We should have earnings on this one coming out in October. I think the earnings will be spectacular. I think that's eventually what pushes this one to the upside. But if not, if you pull back with Tesla, you've got a 200, it says weird to say this because we're used to the higher price, but with Tesla, the new buy price is somewhere down here at about $220 per share. I think you can probably buy 10% higher than that. So that would put you kind of at that 240, 250 region. That's where I'd first be looking to add or start a Tesla position. So hopefully those areas help you. Again, I bought Google this week because it was within 10% of what I think is potentially rock bottom for this stock. Other stocks like Microsoft are getting very close. Other stocks like Apple, pretty far away. Amazon still a ways away, but if you get that momentum coming back, those I think can be absolutely great buying opportunities. From the shorter term perspective, I like NVIDIA for a pop at some point, also Meta as well. Hopefully you guys enjoy your weekend. Thanks so much for tuning in. I had a really busy week from a family perspective, so we missed some earnings videos. We'll try to catch up this weekend, but we'll clear all that up and we'll be back next week with lots more videos. Hopefully you guys have a great weekend. See you again soon, and good luck with your investments.